Hey, Renter Retires, it's Adam Schroeder here with another episode, and I am pleased to be joined today by Dr. Axel Meierhoefer. He is the CEO of Ideal Wealth Grower. Axel, thanks for joining me today.
Yeah, hey Adam, nice to see you again this week for the second time.
Yeah, so Axel and I have worked together for, I don't know, a year and a half, 2 years, somewhere in that range, it seems. And, I was on his podcast recently, and we just want to dive in and really teach y'all what he's doing, because he's helping people invest in real estate. So tell us, Axel, what was your introduction to real estate?
Well, the main thing was that I got out of being in an employment role as an executive in a software company, not necessarily by choice. And I decided I wanted to start my own business and realized, well, in some way, shape, or form, I need to do something for my own retirement, unless I want to work forever, which at the time and even now I don't really. So I looked at and I have to say, maybe for your audience, that was 2005. So I'm like, okay, what could I do? And at the time, everybody was very aware how bad the stock market had behaved just a few years before. So I thought, okay, investing in the stock market is not it. What else could I do? Started researching, and totally just for myself, and found that a lot of successful people were investing in real estate. So I started looking into it, buying courses on CDs at the time and so forth, and then began investing. And as people probably find out today, I love to talk about it. And so I told everybody what I'm doing, and sooner or later they said, hey, can I do this too? So that's how it started.
So what was your first deal, and how'd that one go? Over the long haul, because I know you're a buy and holder. So kind of how did that one go over the long haul? Because if you're buying in 2006, 2007, I think everybody knows what happened, a year later.
Right. Yeah. So the very first two very first deals were there's a German word, it's called Lehrgeld. I don't know, with somebody like a German last name, if you know this. It's basically, what it means is, if you are an apprentice, there's a reason that you're not making the same amount of money like the master teacher that teaches you, right? So the difference is basically what's called Lehrgeld. And so I'm always referring back to these first two deals as Lehrgeld, because the one property was in Germany and we were in the US, not having any idea about professional property management. So we were lucky, in my opinion, that we broke even when we actually sold it, because we tried to move out of it. It was our residence, and then we rented it, but nobody managed it. And yeah, you can imagine how that went. And then the second one was disappointing, because we were living pretty much right next to it, like street over. Put in a really good tenant, had an advisor who owned a real estate agency, but we made the mistake of not making the fireplace inoperable. So the tenant caused the fire department to show up, and then I obviously got notified, and I talked to the firemen, being happy that the house hadn't burned down. And they said, yeah, the tenant claims that he made a fire and didn't know that there's such a thing like a chute that you need to open. So your living room, dining room, kitchen area is ruined. So I decided, okay, maybe this real estate thing is not the right thing. And then I made hopefully the right decision to say, maybe I should learn about it first before I'm doing it, rather than doing it and then learning the lessons the expensive way.
Yeah, so that's a lot of times people hit that first speed bump and just decide, nope, this obviously doesn't work, right? This
exactly
is not the way I want to go. Clearly nobody, all these people who made money in the past, it's because they bought 30 years ago, 40 years ago, and now they're still holding it, which in some cases is true, but in 30 years, people are going to be looking at you going, oh man, he's so lucky he bought 30 years ago. So yeah. What made you had a bad experience, and then you decided to learn more about it. Why did you decide to learn more about it rather than just say, I'll go back, I'll go back and look at maybe the stock market again, although I know you just went through the 2000s and working in the tech space was kind of terrifying, but why not go into something else? What kept you with it?
Well, one thing, I think this is a little bit of probably pretty typical German way of looking at things is, and I've been accused of it many times, is to be rather analytical, right? So after these two things, I was pretty close to what you were describing of thinking, is this really the right place to invest? Should I try something else? I didn't really know because in my mind I had dismissed stock market. I had tried real estate and I wasn't really that much aware. You have to keep in mind there was no crypto yet or anything like that. So it wasn't that there were 27 other opportunities right in front of me. So I basically tried to analyze what was the reason for what we experienced. And what I found out, number one, was I hadn't really gotten any training, right? I tried to basically do what an experienced person would do without ever even going through an apprenticeship. So that was the one thing. The other thing that I found out is that I hadn't really done any kind of significant amount of research about the deal itself. Because even if you would say, okay, the option would be to go into the stock market, I think anybody, even if you haven't done anything in money, investing, finance, whatever, you would say, well, before I commit to anything, at least I want to look into it a little bit. And so it became very obvious to me that I needed to look into it. Now, you have to keep in mind at the time, we had now moved to Santa Barbara, California. And so I started buying, books and stuff and wanted to look into it to see, was it really my fault? Is it not working? Is everybody just pulling my leg, telling me real estate is a good thing for successful people? Do you need to be rich to make it work, or any of those kind of things? And analyzing this, I found out even at the time, this was, like you said, like around 2008-ish, not only was the market crumbling, but the other thing I found out is at the time before the crash, there would have been no way that somebody like me with a relatively modest income, regardless whether military or my job as an executive or the money I made with consulting, to really make an investment portfolio work in California or in the Santa Barbara area. And that got me to think, okay, so is there any way to make this work differently? And I really read about, what is syndication, what is a real estate investment trust, and so forth. And to me, what I really learned from it is, if I want to be in control of the asset that I own, or the money that I invested that buys me the asset that I own, then I have to go to a place where that is possible with my means. And my means meant I could go to Ohio or Tennessee or Idaho and buy 100,000, or even my first two in this new iteration of investing. My first two properties were 79,000 and 82,000, where the lender said, you're really close to the minimum loan amount that we can actually give you. So that started making sense. And like I mentioned, I told everybody in Santa Barbara. Now this starts hopefully making a little more sense. If you live in an area where we moved there and we said, can we buy a house? They said, how much money do you have? We said, well, we're looking at 200 to 250,000. The answer was, you can't even get a lot, let alone a garage. So a house, forget about it. Right. So at the time when we moved there in 2003, it was common to have 600,000 house prices in the Santa Barbara area. Now it's probably $1.5 million or whatever. So when I told somebody in that area, my friends and colleagues and stuff, that I just bought a house for $82,000, they thought that must be like a birdhouse or something. So, yeah, but when I told them that the birds are actually paying rent, that blew him away,
So, what, you have a very, we'll call it interesting story on your website about your first 1031 exchange. I would love for you to run people through kind of how that worked. How were you able to make that happen? Because it seems like a pretty tense situation, just because, a lot of people, they get into real estate, they get started, they know they're going to 1031 in the future. But there's some very strict timing on there. So talk about that 1031 exchange you did.
Yeah. So we had a property that we sold, and I think the most important thing before I go into any details is that when you want to do something that is complex, And I make a clear distinction between complex but not necessarily complicated, because it's really just a sequence of steps, but they are relatively complex and have a lot of rules attached. It is, in my opinion, the best advice, and this applies very much to 1031 exchange, to have somebody on your side who can lay out every step and every time criteria, like the first 45 days and then finishing the deal in 180 days and stuff like that. So basically laying out all the rules. And on top of that, to say, how can we mitigate the risk of falling into any kind of situation with these rules? So to answer your question, I had this advice, I had this access to people who do this professionally. They laid it out for me. And so for me, it was clear to say, okay, before we actually close on the property we're selling, we should have a pretty good idea where we want to invest, and ideally even start identifying properties. And that's what we actually ended up doing. And I knew I could get anywhere between 5 and 10 properties for the money we would be able to exchange. But at that moment in time, the market was pretty hot, so properties weren't necessarily on the market very long. So for me, the reaction to that was, logical German that I am, I said, okay, if we have a chance between 5 and 10, we need to identify 20. And one thing I want to say for anybody listening to us and maybe not having done this kind of stuff before, in general, whether it's a 1031 exchange or any investment, get somebody who has experience with this stuff, but also make it a habit fundamentally to always ask questions, whether they feel silly to you or they feel simple to you or they feel totally off base to you. If something isn't crystal clear to the point that you could explain it to someone else, ask, right? And I got super, super annoying doing this process, right? To ask the people that I was working with, what would happen with this? And what if this, out of these 20 properties, we only get 12 that are actually still available when we close? What happens if we close a month late? And all those kind of questions. And so even with all of that, in the end, we were almost not able to get all of the money under the umbrella of the 1031 exchange, like with a few days spared. But I think what made it overall work was the fact that we had several more properties available. And keep in mind, for anybody who has a little bit of experience in residential real estate investing, you as the buyer, when you're exchanging, so you sold your property, now you have basically, with some further stipulations, 180 days to finish your exchange. It's one thing that you make everything available, that you make sure that everything works, but you also depend on the other side, the seller of what you are buying, to make it work. And if suddenly it turns out, okay, you have the inspection of one of your properties and they find out they have termites that cannot be mitigated by just spraying something, while you wouldn't really want to rush to buy it without knowing what the hit is financially, or their finances are not in order, or there is a lien on the property, or a million other things that could be the case. So my lesson learned, even though we were ultimately successful pulling it off, my lesson learned was do even more due diligence on the properties you want to buy. Now, today it would be different because there is not so much competition with potential owner occupants. When I did that exchange, I, as an investor, wanted to make an exchange when everybody wanted to buy houses, right? Like, so some houses were literally only on the market to get them under contract for like a week, right? And so, but fundamentally, the message I learned from it is, that is what I'm, by the way, preaching, and I'm hoping I'm providing it also as a service, is find people who have actually done or are doing what you are looking for, and then use their expertise. That's why I'm offering mentoring, because all the things I've learned, I can help for you as a potential newbie to avoid, making mistakes or falling into the traps. And it's not that I claim I know it all. It's I know a lot of people like you, Adam, and others, where I can go to and say, hey, Adam, I'm looking for a client's next investment. Here's what he wants to do. What do you have in your inventory? But when I talk to you, I know that you do all the vetting. So when you say, hey, this would be a good deal, then I can tell the client with confidence, this provider, RTR, gave me this deal and I know them and I trust them and that's why I deal with them and that's why I'm offering or suggesting this deal to you. And so that's what I'm doing to my clients, not just when it comes to finding properties now, but for exchanges, for, what kind of insurance you should have and all this other stuff. And I learned a lot of it in this relatively time-compressed process of the exchange. Because if you don't make it in 180 days, then the last one, which was almost the case in my deal, might fall out of it and you have to pay taxes on it. I want to maybe say one last
their money.
Yeah, one last thing. What people sometimes, if they even get to that level of depth, they think if you, let's say, had, like in our case, about $200,000 to invest, which would have at the time cost us about $40,000 in capital gains taxes if we had the whole amount to basically claim as profit. And you do an exchange, and let's just say in our case, the last property that was one of those $82,000 properties would not have closed in time. So we would have closed on day 185 or so. That doesn't mean that you now have to pay the capital gains tax on the whole amount. You only pay the capital gains tax on the amount that you don't exchange, right? So that $82,000 property would have been a $16,000 down payment. So we would have had to pay capital gains tax on those $16,000. A lot of people think if I don't make all of the deal completely finished, then I have to pay the whole capital gains tax on the whole amount. That is not the case.
Yeah. So thank you for bringing us in there. And I do think it's important, you mentioned that as you were going through this, you were annoying people and this, that, and the other. One of the things that I love about being in the real estate world is it's really hard to annoy somebody if you're trying to educate yourself. People in real estate are very open. I've seen about, telling you their goods, telling you their bads, sharing information with you. It's one of the most open and honest things. Like people will tell you, and I've told people this myself, they will literally tell you, I am cash flowing this amount of money. It's almost like if you went to a job and somebody came up to you and was like, I'm making $60,000 this year. And another person's like, I'm making 65 or 70. It's just an open conversation that is really rare in today's world, that real estate investors, for some reason, just feel completely comfortable telling relative strangers, like what they're doing, how much they're making, how much they're losing, and trying to figure out how to improve themselves along the way. So I highly doubt that the people you were talking with were actually annoyed, but I could see how you could think you were being annoying along the way.
Yeah, that's probably true. I mean, I was always thinking that because I was wondering if somebody would be asking me like the 127th question, would I be annoyed, right? So that's where that came from. But you said something very, very important that I want to kind of illuminate a little bit to your audience. You describe how real estate investors are with each other. And I'm absolutely 100% in agreement with you. But one thing that has happened, in my opinion, you tell me if you agree, in the last, I would say probably 5 years, is that there are real estate investors, meaning people like you and I, RTR and Ideal Wealth Grower and other companies, where we are helping clients, but we are also investing as a company or individually. And there has now emerged a new group of people within the real estate field who I would call real estate educators, whose main and almost exclusive focus is to put out learning material, training material, online courses, whatever word you want to use. And they offer for a novice, for an apprentice, for an early stage person, for somebody interested in this asset class to learn about real estate investing. And I want to very much caution anybody listening to the two of us that one thing when we're talking about being annoying or not annoying, but ask the question, how much of the stuff that you're teaching in the course are you doing right now? When was your last closing? When did you buy the last property? What was it? What did you pay for it? If you're really blunt, you can see how much profit and how much cash flow, like you said, Adam. But the point is, I'm really a little concerned by now that there are too many people out there who provide course and learning content and are not really in a day-to-day experience in investing. So for me, somebody like that is a real estate educator, but not an investor. Now, what we both do, you do it through your academy, I do it through the mentoring program, is we combining the opportunity to invest and the hand-holding in the process to finish the investment and close with education. But if somebody asks you or asks me, what is the last deal that you're working on, we would probably both talk about our Florida deal right now as the current one that we're working on, which is truly now, right, like we're working both on finishing those deals. I want the audience to really make sure when you get into real estate investing because you're interested, because you think it's a good thing to be in value assets, make sure you're connecting with people who can actually show you what they're doing, and don't let them fool you about stuff they did 8, 10, 15 years ago. That's completely irrelevant. Now is what counts. Right? And there's nothing wrong with having a great online course for a reasonable price. I'm all for education. But if the people who put out the education cannot show you that they're actually doing it themselves, I would be worried and careful.
Yeah, absolutely. Whether you're new to investing or aiming to diversify your portfolio, Connect Invest makes growing your wealth easier than ever. Visit connectinvest.com/RTR today and see how effortless it can be to start earning passive income. Real estate investing, simplified and within your reach. So talk a little bit about whenever you're talking with your clients and trying to help them grow their portfolio, what are some of the things as you teach them, due diligence? I mean, you can tell people, I trust Rent to Retirement. They do their homework. They have their properties. But I always tell people, look, we've vetted these markets. We believe in them because of these reasons. But you really need to go and, look at this deal and look at this market yourself because, you want to make sure that you're comfortable getting into what you're getting into. So what are some of the things you tell people to do to really kind of upgrade their due diligence work?
Yeah, so what I'm basically doing, I call that hand-holding, the hand-holding part of the mentoring program, is we have an educational component to say, what should you do? What are the things to look for? And explain why, and then encourage them to do them. But what we do in addition to that is to say, okay, so now you got all the information. You may have gotten a pro forma from RTR, for example. You went on Zillow and you did a certain number of things. Now, either I ask them, show me what you did above and beyond me telling you that this is potentially a good deal. And they show me, but the first few times, the first few deals, what we more likely do is to say, okay, I have a pro account in Rentometer. Let me use that one and run the numbers that RTR provided for this deal through our Rentometer. Is it really going to be $2,200 in rent, or is Rentometer saying $1,850 to $2,000 is more realistic? Then I have a pro account in DealCheck, so let's run it through DealCheck. I also have a pro account in Bigger Pockets. So we run 3 calculators. If they all kind of come out to the same thing and they match with what RTR said, then we can be pretty confident, right? So same thing, if we say, okay, let's send an inspector in for this deal, we always, there's no way that we buy something without an inspector. The inspector,
how you get scammed.
The first thing we do is, if you don't know the inspector already, which I know a lot of them by now in the areas where we have our turnkey providers, but let's pretend it would be a totally new area that the client found for himself for some reason wanting to buy a property, even if it's from your list of hot deals. So we call the inspector and ask them, without saying anything other than we are interested in investing in a property, we need an inspector. Do you know, like fill in the blanks in this case, Rent to Retirement, or if it comes from a turnkey provider that you worked with, do you know this provider? If they say, yeah, I've heard of them, we hang up, say, thank you for your time, find another one. We want to find somebody completely independent to really get a full report. And we also I always try to convince my clients to say, don't be shy to spend the extra $50 or $60 to also get the termite inspection and the foundation inspection and that kind of thing. And then again, we do the hand-holding. We literally go through these 90-page inspection reports and go through it and establish a negotiation position. And often what happens is clients say to me, there's so much stuff that I've never heard about, don't know anything about. I'm not a contractor. And I always say, hey, that's why you're in my mentoring program, because you and I can call either the inspector or we can negotiate with the seller together. And, what we typically would do, just to finish that example, is we make a list of all the things. We use the traffic light approach. What is red, safety related, has to be fixed. What is yellow, where we believe it should be fixed, but it's maybe negotiable, and what's nice to have. And we send that out in an email and say, okay, of the things that you see, which are all the things, just tell us by the number, which is corresponding to the inspection report, what you're going to fix before we close, or give us a credit. And then we make a call if it's not satisfactory, and I'm together with my client on that call. And most of the time, the client is seeing how I am basically talking to them. The biggest thing, by the way, Adam, I don't want to go into too much more detail, is my role as their mentor, the way I see it, is to, as a role model and as an educator, teach them to adopt the mindset of a business owner. So that they, and the one sentence, if you ask any of my tribe members, as I call them, what is Axel's main thing? They would say, he constantly tells us, you are in charge. These people work for you. These property managers work for you. The title company works for you. The bank works for you. The inspector works for you. The appraiser works for you. They all work for you. They're not employed by you, but kind of. You are the king of this empire, LLC, whatever you name it, and you are in charge. And that's besides all the nitty-gritty stuff, and I can talk hours and hours about it, but that's the main thing why I'm saying it's not just you getting access to the deals and access to the tools that I have. What you really get, at least as much, if not more so, is help to adopt this mindset of the creator of your own future, the person in charge that needs to learn how a business owner is actually dealing with other business owners or other representatives of businesses. Because we don't learn this at school, we don't learn this as an employee, and we need to learn it if we want to have a successful investment business.
Yeah, I agree 100%. Every time I buy a property, I learn something new from it. I save more documents so that, you find out later, oh man, for my next deal, I'm going to need this, or it would have been really helpful if I'd kept that. And so you download it. I also tell people with the inspector, especially, that initial conversation with the inspector needs to be fairly robust. I mean, it needs to be, hey, send me a sample report of, something you do so I can see it and understand, if I can understand what you're going to be presenting to me. Do you do a video walkthrough? How much is your reinspection? Because that's going to be something important too. Once you get your inspection, I tell people there's always going to be something. I mean, your inspector, even if it's beautiful, they have to justify their $350, $400 that you're spending on them, right? Or maybe even $500. So you're going to get a bunch of things that need to get done. You're going to negotiate. They're going to go back. They're going to fix things, but you still want to, it's trust but verify, right? So you're still going to want to send them back out there. So are they going to charge you another $200? Are they going to charge you $50, $75? Make sure you're comfortable with the total investment that you're putting into it. See how long they've been around. I always like video walkthroughs of the property for a couple of reasons. Number one, I want to see it. But number two, it also tells me how comfortable my inspector is with technology, because I want him to have been doing it for a while, which is one of the things, how long have you been doing inspections? I want him to have been doing it for a while, but not so long that they don't understand the technology of today's world.
Yeah, absolutely. There's actually one little thing, I don't know if you do this, but maybe for anybody in the audience, that I have adopted when it's with a new inspector. And some of my clients have called, have told me that they feel it's almost like setting a trap a little bit. And I'm not doing it for that purpose. But what I have adopted, asking an inspector that I haven't worked with before, either for myself or for a client, to say, I'm sure with all your experience, you have seen probably amazing stories, amazing things when you're inspecting. Tell me some of the worst ones that you have experienced. And they typically start out with some kind of crazy stuff. But the main important thing why I'm doing it is whenever they come to the end of one of their little vignettes, this happened at this house, is the really important question: what did you do about it? Right? Like where people, I remember one where he said, okay, I got to the house and they gave me the key and I was supposed to have access to everything, but doors were closed. I couldn't get in the basement. It was freezing outside. Wasn't brave enough to open the faucets. I didn't know if they were frozen, and so the report was much less than I would normally do. And my question was, what did you do about it? Right. And he said, well, I wrote it all down as much as I could, and I provided my concerns to the client. I said, so you didn't go out and did a true inspection when you actually had all these things that you needed to have access to open? And they gave a pause, right? So the purpose is not
I'm going to tell a different story.
The point is to say, when you tell me your horror stories, I'm not really interested in the horror story. I'm interested in what did you do about it? Because when my property, since we're not the owners yet, if that inspector goes out there to get access to the property and do a thorough inspection and is thrown off by these potential hurdles and pitfalls and stuff like that, then I have to question how valuable is the report that I'm getting. And the fact that it says I couldn't do this and I couldn't do that, is that a $10,000 hit that I don't know about, $20,000 hit that I don't know about? That's how you need to think about it, right? So I want to have an inspector who is, like you said, up to date with technology and uses the things and does good reports, but is also not willing to say, okay, I'm not going to challenge the people that, give me access to the property. You have to.
Yep. Well, Axel, I want to give you some time here at the end. If you wouldn't mind just telling people about your, joining your tribe, what you do with your tribe. I mean, I know we've touched on quite a bit of it, but, just who's a good fit for what you're offering, and where can they find you?
Absolutely. And thank you for giving me that opportunity. Besides the stuff that we have already discussed, I would say one of the big things, in addition to working on anybody joining us to realize I'm in charge, it's my business, these are my investments, I'm in control, I'm in charge, and I'm entitled to get performance out of those I pay. The other thing that I spend a lot of time on that is probably not typically expected in a mentoring program like this is that I'm really, as soon as we start getting into the first investment or have it closed, start working on what I call protecting your family and your assets. So we're getting into setting up your LLC if you don't have it for the first deal already. We're setting up an estate. We're setting up a series structure. We're making sure you have a will. We're making sure you have identified beneficiaries. We're making sure you have established some account with an organization that gives you some legal protection, all those kind of things, so that nobody can ultimately, and with one property, it's not that big a deal, but it's easy to set up when you don't have a lot of assets yet, so that when you're actually accumulating this portfolio that you ultimately need to have, so that you have the freedom to decide, can I live off my passive income, retire early like rental retirement says, or do I keep working? When you get to that point, the more you acquire assets, the more you become a juicy target for anybody who wants to sue you. And only when you said not just learning how to get the assets, learning how to get the mindset to be in charge, but also have set up the structure so that you and your family and your assets are protected from any liability and stuff like that. And you can turn it over without a whole lot of problems to the next generation, which I believe any long-term investor is probably interested in. That's the part that is not so obvious. And that's what we're doing with our clients. We help you to get quickly into the first investment. We help you to adopt the mindset that you need to be successful as a business owner, real estate or not. And we help you to create the structure necessary to protect you, your assets, and your family. And that's what the program includes. And then obviously all the relationships that I formed over the years, I use them and everybody in our community uses them equally. So to find out about that more, I always love to talk to people and get to know them and see if we're a good fit. So to do that, you would go to idealinvestgrower.com. And on the home page, there's a little button that says something like Discovery Call. That's a complimentary call. We can have a conversation. You tell me what you want and how you want it, and I can tell you if that's a good fit or not.
All right, fantastic. Well, that link will be in the show notes for everybody to see there. Axel, I really appreciate you joining us today and giving your insights to our listeners. To everybody else, you mentioned the finding the properties, vetting the markets, and talking to them. You can find those at renttoretirement.com. That's renttoretirement.com. I do want to say, if you have any questions for us that you want answered in future episodes, don't forget, you can email those to podcast@renttoretirement.com. That's podcast@renttoretirement.com. Really appreciate the time you spent educating yourselves today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.